and have you join us. And we're very proud of this group of leaders in real estate finance. They have a lot to share, and I think you'll benefit from listening here. So without too much further ado, I'm going to make a few announcements and then we'll let them get started. So just want to remind you that we are offering continuing education to our members, and that is available online. If you look in the chat section, is that how you say it? You'll see a link to our website and you can sign up for it there. There's a session tomorrow. There's still room available. And in October, we have 2 exciting events upcoming as well. Renee Rodriguez is going to be doing an event title sponsored by Movement Mortgage called Amplify Your Virtual Voice. And then after that, we have a diversity panel, and we have leaders, national leaders speaking about diversity and the racial questions and struggles that we have in our world now, as well as how to close the gap in homeownership across racial gaps. Kelcey Myers has graciously offered to be the fabulous moderator that she is and engage our participants. So I'm going to turn this over to Kelcey with Fidelity National. She's the #1 leader in the nation for Fidelity National. Proud to know you.
Oh, that's so kind. I don't know if I'm #1, but that's my dream. Well, thank you everyone for joining us today on our very first panel of this fiscal year, as Lisa stated. We are very excited to have you all join us. We have a wonderful panel put together of leaders in our industry, and they range from directors of operations, regionals, and also a real estate professional that is also the incoming president for SCAR of King County. So without further ado, I would like to introduce to you Leah Rollins with Evergreen Home Loans, Darren.Clark with Caliber Home Loans, and Lynn Sanborn with Windermere. And they are going to answer your questions at the very end of this. So please, if you have any additional questions, put them in the chat box below. But we have some great questions, and we're going to start off with our very first question we are going to go with with Leah. And this question is, what is the biggest change since March that has had the positive effect on what you do all day long? So please take it away.
Well, the biggest positive change, I would say, is being able to still have a job and be employed. The fact that we are in the mortgage business and are thriving right now is a blessing. And the fact that we can work remotely. I did not work remotely before, and I actually get a whole lot more done working from home and not having to have that commute or, getting ready. I can just walk down the stairs and into my office. So that's been probably the most positive change, is being able to work from home, have a job, and do it for longer hours.
So with that being said, Leah, I have a question for you. Pardon me for not doing this sooner, but with you being at Evergreen Home Loans, what is your connection with Evergreen? I know that you are working long hours, but tell us a little bit about what you do behind the scenes there for Evergreen.
I am the regional processing manager for the Zender region. That consists of 20 branches in our region, and I have about 26 processors in our region. And so I support the processors. I also support the sales staff and LOAs as well.
Thank you so much. So the next question goes to Lynn. What has been your most positive outcome that you perform every single day since March?
That's an interesting question. Well, first of all, I'm Lynn with the Windermere Real Estate, and I've been with Windermere for about 30 years and worked with the Realtor board for probably about 6 years. I would say for me personally, it's no open houses. And I think for a lot of agents, that's probably a huge negative, because I think that's where they pick up a lot of their business. I think obviously I do a lot of my work from home anyway, so I don't know that that's changed as much. But I think there's more communication with clients, via Zoom, via email, via phone, because we can't physically get together. So there potentially is actually more communication going on with clients. But I haven't felt huge changes, honestly.
Okay. That's good to know that there's more communication out there with your clients since we've started the shutdown and having to deal with the changes of COVID. Darren.Clark with Caliber Home Loans, and give us a little quick nugget on what you do for them, and then answer that fine question, the positive.
Sure, you guys. No, thanks. Appreciate that, Kelcey. So Darren.Clark, I'm a regional vice president with Caliber up here in the Pacific Northwest. Basically this year, my role has been to make sure that, the challenges that we've had to navigate, whether it's the financial aspects in March and April, we understood them and could collaborate on those to solve. And really just kind of rep my team, my management team, our production team, and as a partner with our operations. So it's been an interesting year for sure, but I'd say, probably two things that have had the biggest impact on me from a positive standpoint this year is, one, no longer commuting because our entire company is working remote. And for me, being a regional, I was on the road every day, probably 2 to 3 hours. And so you take that time, convert it into really time at the desk. And I do think that, I know everybody's been a lot more efficient this year. They're working from home because I think that just by nature, the inability for us to shut our computers off, a lot of us are working a lot more hours than we were before. So I'd say we've become more efficient. Pleasant surprise has been the technologies and how they've been able to work, virtually, switching, from one day to the next, being work at home. And that's been a huge blessing, obviously, with the volumes that everybody's seeing right now. Having the ability to have, your processors, your production assistants, your funders, everybody, underwriters, et cetera, has been a huge blessing this year and a real positive takeaway.
So Darren, I'm going to let you take the second question, and that's what's the negative?
Yeah, the biggest challenge since March, if you look back, obviously we had to navigate the financial aspect of March and April, which everybody on this call were part of teams that were able to do that. But, really now the challenge is managing the capacity, and it's, well documented. There's $11 trillion of qualified mortgages out there to write. Our industry has the ability, our capacity to manage about 2 to 3 trillion annually. And so I think that, for me, the challenge right now is finding confidence to know that interest rates are going to stay low enough, long enough, so that we can help as many of our qualified, borrowers over the next year. I'll say, the Fed has partially eased some of that concern and taken a stance recently that they're going to keep rates low, regardless of near-term signs of inflation. And I think if we can come to grips with the confidence there, I think that we'll be able to realize a lot more of the volume next year that we couldn't get this year. Every loan officer right now wants to know that we can get it all done. I think as an industry, we got a great shot, but I think it's going to take us another year to get through this 11 trillion of total volume.
Wow, 11 trillion. So Leah, that brings me to you, since you're on the front lines of this 11 trillion trying to get shoved through on production. What is your biggest negative point since March? Kind of share a little bit of flavor with us on that.
Yeah, it's a great question. Is that for me, Kelcey? I'm sorry.
That was for Leah. That was for Leah.
I'm sorry, Leah. Go for it.
Darren.
You're shining like a star, Darren. It's totally fine.
You can mute me.
I'm going to piggyback off of what Darren's saying in regards with the volume. The amount of volume that we have is more than any of what our processors have ever seen. And so handling the stress of the processors has been really difficult. Before we were able to interact and be together and share our thoughts. And now we have Zoom calls, which is great. But what I've seen is when we try to interact with Zoom calls, the processors are just too busy that even if you're trying to do a social happy hour and connect, they're still working, and they're not able to step away like that. With the processors working from home, they find themselves working longer and longer hours because they are at home, and so that's been a challenge. And also, I would say everyone knows that everyone's working from home, and so sometimes that expectation that, well, the processor's working from home, the funder's working from home, well, why can't they just work a little bit longer and get this done for me? When the reality is, everyone has to put a time limit on their day to be able to have work-life balance. So it really is just handling different personalities, different stresses, different emotions of each individual and helping them get through the volume that they have, because it's not going to stop. The biggest thing with my processors that I get is we're going on 6 months of this. You know, we don't see an end of when this is going to happen or when we're going to slow down. And I feel that they just need to kind of be given a little grace. The field, everyone needs to give each other a little bit of grace, because we're not in a race, we're in a marathon. And I just think that everyone kind of needs to look at it that way.
I have an additional question for you, since you are on the front lines with your teams there and dealing with the stresses of working from home. How do you help your teams kind of navigate that work-life balance, since they are working from home? And now a lot of us have, you know, there's quite a few of us that are still in the industry that have small kids that are doing distance learning and all of that kind of stuff. I see a couple of heads nodding back and forth. So now it's not just sending your kids off to school and saying goodbye as they jump on the bus and going to work. It is definitely a lot more stress on the parent or parents that are able to, or that are working from home. So kind of share a little bit of what you do. And I know this is a curveball of a question for you because it's not something we planned out, but I would love to have your thoughts on this one.
No, it's okay. I literally do this every single day. And so I get on the phone with them more. I mean, that's one of the blessings, is we may not be able to see each other in person, but the phone calls that we have, everyone that I work with knows that I'm available, whether it's a processor, an underwriter, a funder. That's just my personality. If they need something, I'm here to listen. I'm a direct person. I'm going to tell them exactly how it is. And, you know, we talk about it. I have a lot of times the conversation starts in tears because they're having breakdowns, and it really is hard for certain people to handle it. I have processors who are single moms with kids at home, heavy workloads, trying to homeschool them, you know, just trying to live. And I really just talk it out with them. I feel like I've become a counselor in the last 6 months. I'm not certified, but you know, I just really try to be there for all of them, and we have conversations and we talk it out. You know, I tell them to let it out. We have to let it out. It's hard for them to step away, because even leaving for a day, the repercussions of what they come back to, of just taking a day off, they'd rather work through it. But I do let them know, you guys do have to take a vacation. You do have to give yourself time. You do have to take a weekend. And so it really is just about communication. And, you know, we all try to banter together on email and have some fun each day, because at least everyone's going to see email eventually. But it's about communication, and 10 times out of 10, our conversation ends in laughter.
I like that. I like that. Keeping it positive, keeping it upbeat, and letting them know that you're there with the communication. Lynn, we want to hear from you on the realtor side of things. What has been the biggest challenge since March? I know since you're working from home, and you have been working from home, but you go into the office and you do your office meetings and everything. I want to hear from you on that side of things, because it's kind of a different realm, right? So let's hear from your perspective.
Yeah, I mean, we're obviously, everything is Zoom. So I have tons of realtor meetings. I have tons of office meetings. They're all Zoom. I think the biggest challenges are, you know, navigating the whole showing process when you can only have 3 people in the house, and you've got kids sometimes, and, you know, parents that want to come see the house. So you have to have some wait outside, some come in. Same on inspections. I'm there with the inspector. I can only have 1. So if you've got a couple, then somebody's got to sit outside or not be there. I've sold new construction, and I can't go to any of the design meetings. I've sold 3 in the last month. I can't go to any of the design meetings with my clients because of the restriction of how many people can be there. And so I'm not able to kind of help them with that process unless they call me later or on the phone. Or so I think, you know, that's been, I think, a big part is just, and, you know, clearly the safety of our clients. Because if you have a seller who's living in a home and you're having all these people in and out, obviously there's a concern. Or you're taking your buyers into homes, you know, it's concerning. Even though we're practicing all the safety, you can't sell real estate and not be out there going through homes and, you know, going into sellers' homes. And I know if I was selling, I would be concerned, you know, people in and out of my home all day and knowing if they've cleaned, and they're going to have to scrub down after people come through. So, I mean, it's definitely changed our business in that way. Some people are buying without seeing it. I've had a client who bought a condo who didn't see the condo. So anyways, I would say that's probably, I think for me, the things that have been the hardest. And, you know, I told you guys when we talked last week that, you know, another thing is my advice to agent is don't be tone deaf. Don't be all over Facebook and social media bragging about your business and all the deals that you're doing, because we have so many people out of work and struggling. And when you keep talking about how you're kicking butt and selling all these houses, it's just tone deaf. I mean, I've had to say, just be quiet about your business. You don't need to be doing that right now. It's not helpful when we're in the situation we are in. So I think it's, you know, changed things in a lot of ways, you know, being more compassionate and, you know, being, you know, still being of great service to your clients, but not doing as much marketing as you used to do about all your business. So
I love that. And actually, Andy McDonough said, great point. Thanks for making it. And last week when we did speak, we kind of talked about the whole tone deaf thing when you brought it up. And I'm so glad that you did, because there are a lot of people that get so wrapped up, and no fault to their own. I mean, they're excited. They're, you know, this is a great time, unprecedented times in the industry, but we do have to be reminded that you need to just slow it down and not necessarily, lack of a better word, brag about all of your business, because we have those people that are, and I explained it, there's 3 types, guys. There's 3 types of people right now that we are dealing with. And there's the type that just keep on going, keep clicking. Nothing's ever affected them. They're not changing. They're going for it, right? One foot in front of the other. There are times where there's people out there that are on the teeter-totter, right? You've had the good days and you've got the bad days, and sometimes those bad days are not great. And then you have the people that are going into the hole, right? They just go into the dark hole and they want it to be over, and they're not changing and they're not doing anything until that dark hole opens up with some sunshine and they know it's all over, right? So there's those 3 types, and you have to definitely know your audience when you're out there speaking to people. So I'm so glad, Lynn, that you brought that up. That's a very valid and good point. Thank you.
well, you know, and we've done tons of legislative work on this, right? And to meet with our governor, first we were shut down totally, and then we had half of the industry completely upset at us. I mean, there was a week where I was bombarded, stagers calling, inspectors calling, we can't get our furniture out. We you know, in the middle of all these sales. So then we got him to agree to essential real estate. Well, then when you have all these people just bragging about doing every kind of real estate and not really essential, you know, it's just, yeah, it was a whole, when we finally got him to agree to letting us do some work, then we had the whole other half screaming at us because what are we doing business during this time? So, I mean, it's been very challenging on that part, you know, serving on the realtor board and having people hold you responsible for everything that's going on. So it's definitely been interesting.
That is an understatement. So my next question is, do you think now with everything that's happened in this industry, when do you think we're going to be going 100% online with signings and all of the documents? Is that going to be coming anytime soon? And that can be either for Leah or Darren. 100% online electronic documents. What do you guys think? Give me your take.
Go ahead, Leah. Go ahead.
I think that we will see it sometime down the road. Evergreen currently is doing e-closings. So we do still have wet signings and hybrid closings, which means everything's electronic and you can sign everything electronically except the note, deed of trust, notice of right to cancel, final CD. We just started rolling out, I want to say yesterday, we've been piloting it. And so now we're opening it up to the entire company of doing the hybrid closing with an e-note. So now the note can also be signed electronically. So there's a few other items that you still need to have wet signed, but having that rollout that you can do the note, I feel that eventually down the line, it will be electronic for everything. When, I don't know, but I see that it's promising because we've gotten this far. It can only keep going.
Yeah.
And Darren, yeah,
let me chime in. So, I mean, we've got the capability right now. I mean, we have funded loans 100% electronic historically pre-COVID, but you guys got to remember one of the reasons that the industry kind of migrated to the electronic basis is really from an efficiency standpoint to get the costs down so we can all compete. And then, of course, through competing, now we have companies that are emerging as consumer direct models, which means we got to get more and more efficient, right? Well, the problem we have right now is most of the efficiencies in electronic delivery are offshore resources. And through COVID, what we've learned is that a lot of those offshore resources, the people don't have the security to work from home that they did when they went to the office like we do here in the States. And so I think really, because really what the e-files allow us to do is offer a more, a less expensive way to do business. And until we get all those entities back to the table, really we're talking about volume basis, right? I don't see it coming back to the level that we saw pre-COVID, for at least until we understand how secure of an environment we'll have on a global basis. Because I really believe the mortgage industry isn't just United States based anymore. We've really become a global industry. And so what we've got to be able to do is continue to protect, obviously, our clients' information, as well as the way we deliver loans to the agencies. I do believe that the e-delivery systems are going to be necessary for us to continue to drive costs down to manufacture a loan. One, obviously, it improves the speed of the transaction, which is super important for our buyers that are competing against other buyers. Two, we got to protect LO comp, and driving efficiencies down does that. And again, to compete with the consumer direct models, we've got to continue to move towards this e-delivery method. I just think from a security standpoint, based on what we're seeing offshore, we're maybe a little bit a ways from closing that gap.
That's interesting. And we all know that the governor signed the order in order to extend RON, which is the remote online notary service, also known as my best boyfriend, till the end of September. You guys laugh, but I have to add that joke in there because honestly, it would make escrow so much more efficient if we could do RON on more transactions. And we have done them. It's just a lot of lenders, like Darren's saying, are not necessarily ready as of quite yet. But this RON does go into effect hopefully in October. We've been seeing RON get extended by our governor here in the state of Washington the very last day of every single month that we have been in COVID. So it kind of we just wait patiently, and every day on that last day of the month, I get an email at about 5:30 saying that he has extended the order. So I'm looking forward to another extension this month. The next question is for either Darren or Leah on, and I know, Leah, you've already kind of covered this a little bit with your operation regarding processors and underwriters all working from home and remotely, and Darren, you have already stated the same thing. And since you guys have already talked about that, do you think that this is a trend going forward, moving out of COVID-19? Either one of you can take that one.
Yeah, I think it's a trend, you guys. Again, if you look at this industry and how competitive we are, and if rates continue to drop, which some people are predicting they will, we will see margin compression hit us next year, right? So what does that mean? I mean, it means all this brick and mortar that we have everywhere, especially when you look at the big metro areas where, the leases can be six figures, really pretty easily. I mean, that all ties into the rates that you have to offer. I think one, we've learned that we can work remote with technology and not skip a beat. We don't have to have, the great big offices that we've had in the past. I don't know how it's going to settle out. I mean, I've got some theories on it, but we'll still need presence in the communities, obviously. But I really think that what this has shown us is, with the exception of human interaction, person-to-person interaction, we can really do a good job working remote. And if the processing team's just been phenomenal, the funders, the underwriters, the production assistants, everybody's just done a fantastic job. I'd like to see, people have the ability to make the decision in the future when we understand what COVID is. And I think our company's kind of taken a position that when we do open back up, quote unquote, you'll have the option to work remote or go to the office.
That's cool.
Yeah.
How about you, Leah?
I completely agree with what Darren's saying. I do think that we've seen that everybody works more efficiently working from home, and we do have the technology, and we're able to do exactly what we were doing in the office, and you're eliminating, commutes and what have you. And yes, it would be nice to have the interaction, but once we are out of COVID and we're able to interact with people, we can, we're able to have parties or gatherings, or we will always have an office to go to should you want to. But yeah, I've noticed that a lot of people who never thought that they could work from home realize how efficiently they do work from home, including myself. So we all have the ability to go into the office. It's still there. We just choose not to because you just get so much more done and you have less interruptions.
Agreed. I mean, I'm working from home and it's fantastic. I just walk down the stairs, get my coffee, and here we go, off to the races. Okay, so Lynn, I've got the most dying question for you. We've got two amazing people in the industry that are on this panel with you, and we have a bunch of lenders sitting in this panel. What can lenders do as of right now and going forward to help the realtors in this marketplace and going forward, in this current marketplace and going forward?
Yeah, I think obviously everybody knows it's a hugely competitive market for buyers. So obviously encouraging them to get pre-approved. You know, I was telling you guys last week, I had a client who's had the lender send me like 7 pre-approval letters. And I'm like, I just need one with your max. And he's like, yeah, but the house is only $650 and I qualify for 8. I go, it doesn't matter. I mean, if anything, that makes you look stronger. You're going to pay what you're comfortable paying. And it doesn't matter what it shows that you're approved for. So I just say to lenders, just send me what their max is on the letter. When you know that a buyer that you're helping is made an offer, call that listing agent, you know, right away and just say, hey, I know you got an offer from these people. I'm working with them. They're great. Give that agent some information. And so that's happened. I've had multiple offers and it happens probably less than 25% of the time where the lender actually calls me and says, hey, I know you have an offer. And, you know, if all else is equal and I've talked to the lender and I can tell my seller that, and they're going to get the deal. And then just, you know, I went through this with a lender because I have a client trying to buy a place on Whidbey Island, that's where I'm at right now. I live here part-time. And anyways, I said to the lender, help me educate him. You know, I can tell him all this stuff, but you have to have that conversation with him about, you know, here's what you qualify for. Here's how you could write a cash offer. Help them with all the steps that they can take to write a more aggressive offer. And, you know, a lot of that sometimes is being able to write a cash offer. And how do we do that? So they're not just hearing it from me, but they're hearing it from their lender. You know, we all know that there's appraisals and there's other things, but I think so I had that lender call that buyer to talk to him more about it. Because when I was talking about it, he was all nervous, but when the lender talked to him and said, here's some strategies, here's some things that we could do, because he's already lost 3 houses on the island. It's as competitive here as anywhere, right? So just helping them with creative ideas to write a more aggressive offer. You know, talking to them about more earnest money down, which, you know, like I said, if they're hearing it from both, I think they're going to be more comfortable when we go in and we write an offer that their lender's on the same page. So I would say those would probably be the things I think are most helpful in this market with the buyers.
I have a question for you. And this is a curveball question. How do you choose a lender that you want to work with? What are some key things that you would suggest for our people that are listening right now, that are lenders trying to earn business in this COVID-19 marketplace? What are some things that you can share?
Well, I think, like I said, communication is huge, right? And I had a Caliber agent on a deal recently. I was the listing agent. And I mean, you know, she was representing the buyer and working with the buyer's agent, but she kept calling me, emailing me. She would send me a little note. And I thought, wow, I mean, and then at the end, she sent me a little, you know, small little gift. So I think the fact that she just kept staying on top of it for me, because I'm a realtor and I do a lot of realtor work. Obviously, I try to, when I need any service providers, I go look at our affiliate list because I support the service providers that support realtors, because we do a lot of volunteer work, legislative work. And so to me, you know, to have those people be part of that process as well. So, yeah, I mean, and obviously not making mistakes, doing a good job, doing what they're committed to doing, which is closing on time, being honest, not committing to something that they can't do. And I just had that with someone who said it was actually the agent. They brought an offer on my listing and she said, listen, Lynn, I want to tell you I can do it in, 4 weeks or 3 weeks, but because of some of the things they need and because of how busy they are, we may not be able to do that. So, I mean, I'd rather have someone be honest about what they actually can do and what the buyer situation is. So even if they can't share confidential information, but they can definitely share enough, because in the end, if the deal goes sideways, I mean, it's going to make the lender look really bad, probably worse than anybody. So I think honesty, communication, great follow through, it'd be great if, again, I know you guys have to be careful. What I do, typically more listing than I do buyers. But, it's great to hear from the lender, hey, we were, appraisals in, as long as the buyer and the other agent okay that, to be able to communicate some of that information. So a lot of times I feel like you don't get those updates unless you ask for them. Some lenders do, some don't. So I would say those communication, honesty, follow through.
And since you're incoming president for SCAR, share with us some things that SCAR is planning on doing for 2021 with COVID-19 going forward. I would love to hear about some of that, and I think that our audience would as well.
Yeah, well, obviously it's been a challenge, and this is considered my year for the banquet because I'm incoming president. So we have usually a huge banquet in December with 300 people and, service all of our, affiliates and people that are getting awards and all the board that's being installed. So we're talking right now about whether we will do that. And I called our CEO and I said, I'm feeling like we just need to skip it, which was hard for me because obviously it's my big event, right? I get to plan the hotel, everything that we're doing. And I said, but we don't want to put people at risk. So my CEO said, let's wait a few more weeks before we make the decision. So, I don't, Battle of the Barristers. I don't know if you guys know that event where we have all the attorneys battle against each other on different issues going on in our industry. We're doing that via Zoom, and that's a huge one because that's where we raise our money for scholarships that we give out to agents' kids, relatives. So I don't know yet what next year is going to bring. I'm not sure that anybody does, whether we're going to, we teach tons of classes. So we're kind of moving more and more of those to Zoom. We just did our strategic planning and our budget, and we're worried about money. We have a big building. I don't know if you guys have been to the Realtor building, but we have one space open and we might have another one, and we're worried because that's part of our income and that's commercial space. So we're thinking, commercial slowed way down as well because, as you guys know, lots of people are working from home. So actually, if anybody needs commercial space, the Realtor building would be a great place to be. So, my goal just as incoming president is all about engaging more people to get involved with what we do, whether that's normally in January, we go to Olympia, we meet with all of our legislators. I just got a call before this, which was with governmental affairs, which I was VP of governmental affairs last year, where we're interviewing all the political candidates and endorsing the ones that support our housing issues. That's stuff you guys could all get involved with. If you are an affiliate, you can come to GA meetings, you can come help interview those people. I mean, it's extremely important work. It's the work that keeps our industry going, that makes sure they don't raise taxes, they don't increase our B&O, they, don't take away flood insurance. I mean, more density, more housing. I mean, we're working on all that stuff all the time. So if you are not an affiliate with the Realtors, I would say absolutely get involved. They just did a cool food drive for HopeLink a couple of weeks ago, the affiliates, and we raised over $10,000 and we gave them the biggest donation of food they've gotten all year long. And it's huge because, as we all know, tons of people are without work and without food. So, the affiliates are awesome partners for us. We do things together all the time. So I don't really know yet. I mean, it was very interesting trying to plan a budget because are we going to have classes or how are we going to raise money for our scholarships? you know, or we have a lease available, another one's going to come, are we going to get those leased? So, you know, we had to definitely make some changes, and also membership. I mean, we were 7,000 members last year. We're down to like 6,600, I think, this year, you know, and so are we going to have more members or more agents leave the business? You know, just like the whole comment about open houses, that's where a lot of agents pick up their business. So I think for newer agents, it's going to be a lot harder. So yeah, it's, who knows, right? I mean, our restaurant's going to be opened. I mean, look at all the businesses closing down. So it's really hard to know. I wish I knew what the stock market was going to do. And so I have a friend who we sold new construction that closes in March. And she's like, I want to sell my house in November, because she's so worried about what might happen to the market with elections and everything else. And I told her, I wish I knew, because if I knew, I'd either sell all my stocks or buy more stocks. Or so it's interesting times, I think, for all of us.
Appreciate you commenting on that question. And I knew that I gave it to you today without any warning. So thank you so much for participating in that one.
Yeah.
Hey, Darren, I have a quick question for you regarding recruiting. And it kind of goes back a little bit to back what Lynn was saying as well, with space available and having people working from home and all of the kind of stuff that we're dealing with right now. How are you hiring and recruiting and training, and what's your guys' plan? How's that looking for you?
Yeah, good question. I feel kind of fortunate here because we do have a training team that is designed to train people when they onboard with our company, and they created a virtual environment and launched it in January. So that was kind of already in play, which definitely helps. It's not the same thing as being in person, but it definitely helps closes the gap. But I think as far as recruiting and building and trying to find the next generation of talent, you know, that's kind of been the holy grail in this industry, is how do we get these young professionals or kids out of college to really take a look at our industry. And so we actually launched a program this year where we actually recruited college, you know, aged or recent college grads. I think we had 1,300 applications, and then we through our application review process, we whittled it down to about a little over 20 people in total. But we're putting this group of people into kind of a full immersion training environment, which we call Caliber University. And the intent is to bring people with really no exposure to the mortgage industry in, give them, you know, a real, you know, kind of deep dive into it and see kind of what path that takes them down. And so we're already trying that right now, just to get in front of new people. But I think the other thing that's super important here, Kelcey, that's just as important as how do we find new candidates and new recruits, is what are we doing as leaders in this industry to create career paths for people? You know, probably on this board or on this panel or people on this call, you know, we all started somewhere in this industry, and whether we just worked hard to work our way up or whether somebody paved a path for us, I think we have a responsibility to create career paths for people so that we can kind of grow people up within the organizations. It sounds so fundamental, and we use the term organic or whatever, but I think that when you can show new candidates that you've actually groomed people, grown them, given them an opportunity for a career path, maybe even a path that could take them through the end of their career. I think that has an appeal to people looking at this industry that only see a position. Maybe it's, you know, a processor or a loan officer that comes in the industry that wants to see other opportunities. And so I think it's kind of a multifaceted answer is A, try to recruit talent from outside the industry. B, try to create an environment, you know, through our culture that shows that we do like to see people grow within the organization and within the industry. And there's a lot of, I mean, again, probably on this panel, people that probably started out at order out positions or whatever positions that are at EVP levels or VP levels. And it's kind of one of the cool things about this business is if you get in the right environment with the right leadership team, they'll help you build that path. We've just got to do a good job of showing people that you've got those opportunities.
I love what you just said. It's not a job, it's a career path. I love that. And you guys treat it as though. Same question for you, Leah. What are you guys doing in order to keep people coming on and training new processors so you don't have that burnout that could potentially happen with people working ungodly amount of hours with the file load that they have?
I'm sorry, I did not know that this was part of one of my questions as well. right now, bringing on new people, it's a challenge because training remotely has been difficult. We do have a training team as well that initially onboards them, but then ultimately, if it's a processor, it's up to me or the branch to train that processor. And so that's kind of been challenging with the volume that we have. I've recently brought on some people and brought back some previous people that used to process for us. And so that's been a little bit easier for transition because they already know our system and the Evergreen way. And so it's really just about everybody helping everybody. We're also trying to retain the people that we have, which is also important as recruiting. We like to make sure that the people that we have don't go anywhere. And that right now is really important to me with the stress that everybody's under. And, you know, I know that everybody's getting recruited by all companies. And so right now it's about retention for me as well as new hires. So it's just pretty much a balance of those. But it is a challenge right now.
Kelcey, can I add something to that? Just
Yeah.
on about bringing in people, you know, and I talked to you about this before too, but you know, we had an office call a couple weeks ago, and you know, a couple of the agents who are African American just cried and talked about, you know, just the difficulty of everything going on in our world right now. And I had one more board member position to appoint for next year, and it was hugely important to me that I looked at the diversity on our board, you know, white, black, gay, straight, woman, man, you know, whatever. And so I just want to encourage all of us to try to bring in people into the community that, you know, that help expand our diversity. Because I think when you look at across the board, you know, who we have serving as mortgage or, you know, agents or whatever, we're not doing very well with our diversity. And so and you know, Darren, when you're talking about all the stuff you guys are doing, it would be really great to try to engage more people to get involved, you know. So, I mean, for one reason, obviously, we all know African-American community have way less home ownership and way less wealth built. And part of that goes way back to segregation and how they could only buy in much less expensive neighborhoods. So they didn't get to enjoy the appreciation of their homes like others have. So I think as an industry, we all need to work on that.
Thank you for that. That's great. I have a question now for Darren. And this kind of goes out to all the leaders that are on this call right now, and that's everybody on the panel and also within the call. Basically, what do you suggest leaders can do in order to not lose sight of what's important while we're all having to deal with these crazy amount of refis coming on and closing those refis?
It's kind of what it all boils down to, isn't it? Is what can we do to help our team not lose sight of what's important? And I think, you know, honestly, Kelcey, I think it just brings the focus on the culture. You know, if all of us can focus on the culture that brought us together in the first place in our organizations, remember that those fundamentals, you know, the people who we want to be hasn't changed. You know, we've been stressed for sure, you know, through what we've gone through. But I think the thing that's super important to remember for all of us on the mortgage side of it is we're one of the only industries probably in the world right now realizing record earnings for almost every single position. And if you put it in that perspective, you know, the positives outweigh the pain that we're navigating through right now. And again, to refer back to what I was saying earlier, is I think we need to have a little bit more confidence to know we're going to have more time to take care of our clients. That I think in the beginning, when we saw rates dip down and at the beginning of March, I think we thought it was a mad dash. We had to take care of everybody in the next 15 minutes. And what we've realized is due to the impact of COVID on, you know, the global economy, the rates are going to be down for a while. And I feel pretty confident saying that. So knowing that, again, keeping that in focus, making sure that people realize you've got more than 5 minutes to get everything done. Focus on your culture. You know, if your culture is purchase centric, then make sure that your priorities are on that purchase centric aspect of your culture. And again, take care of those refi clients as the opportunities come down. I think that it's really important too, as leaders, to make sure that our whole team understands what our prioritization is. And, you know, for companies, you know, like our company, like Caliber, that's, you know, kind of built our reputation in the communities on, you know, being purchase first. we've got to stand behind that. We've got to execute, and that does require some prioritization, reprioritization. But again, that speaks to the culture of who we work. So if we could just simply focus on the culture that brought us together to begin with, and then kind of build it from there, I think the confidence will follow. And I think we'll realize next year's probably going to be a little bit easier with numbers that aren't too far off of what this year will turn out to be.
So you're saying we're going to get used to high volume? Is that what you're saying, Darren?
I sure hope. I mean, I just want to do it and do it better.
I love that. So I'm going to roll it right on over to Leah and ask you a similar question on that. But what can loan officers do besides giving you a clean file as a processor and underwriter? I mean, come on. We all know that they don't love to turn in clean files. I'm married to one, okay? So, and if he's watching, I didn't say that, and sorry, in advance. But no, seriously, what can loan officers do in order to make your lives easier as processing and underwriters in this virtual world that we're living in at this current time?
Well, seriously, it does come down to basics like that, and COVID or no COVID, having a complete 1003 and providing documentation is what's needed no matter what time that we're in. As easy as it sounds, some of the things I think they can do right now is the loan officer can be asking the borrower, if their job's been affected by COVID, so we know that up front and not at, the middle or end of the game. The main thing would be for them to set realistic expectations up front with the borrower and with the agents. I think if you have that conversation up front and you let them know the challenges, that everyone may be having, it needs to be said. It's not just the mortgage companies that are having struggles. It's all third parties. Title and escrow, they are seeing record volumes. Insurance companies, every single part of the manufacturer line that goes into making a mortgage, every single person's busy. And I think that those conversations need to be had up front. Really, if they can be respectful of the processors and underwriters' times, everyone knows how many loans they have and they know what needs to get done. And if they would just allow them to do their jobs and not consistently ask, where's this file? What is the status of this? And just kind of let them get through their pipeline. One of the main things that I hear is in the sense of just, communication and how they speak to each other. Processors are doers and they're givers, and they're there to help you get that file closed. But sometimes the way something's worded to them, you're going to get a lot further if you maybe say something like, hey, I know you're super busy today, but do you think you'll be able to get to this or get this submitted to underwriting, as opposed to, we need to get this in today. So just sometimes maybe the tone and how you treat them, because everyone has high emotions right now, that goes a long way of just having a nice tone with your communication. Please and thank yous are very nice.
I always like to say a kind person is my favorite person. Because if you're screaming at me, I'll be hell-bent if I'm going to work on your file next.
All right.
And I actually started in this very industry. I know you guys are probably going to go, wow, she probably started when she was 10. I did start when I was 10, just for the record, okay? And I did process for a while. And I have to tell you, there was one loan officer, and he would always just throw things on my desk. And this is back in the day when they could walk right up to your cube. And I would go, oh, you want it done right now? And I'd slide it underneath the other files that I was working on. Now you can't have the satisfaction of doing that because we're all virtual, but oh my gosh, wouldn't that be great? I have a quick question for Lynn. So you talked earlier about setting those expectations and having the lenders call you right up front and let you know how it's going with communicating. I know a lot of the times people want to close things very quickly, and we talked about that. Isn't it always better to not expect an extension as opposed to just setting the proper timeline and going forward with that? Kind of give us some flavor on that, because I am seeing a lot of extensions as of late, and I want you to speak on that.
Well, I think an extension is pretty risky, right? Because we're in a market where if you commit to closing on a certain day and then you go back to the seller and you can't get it closed, you know, potentially the buyer could lose their earnest money depending on what the situation is. Like I have one right now, you know, like buyers are writing them cash, but they're still financing. So if they come back to the lender or to the seller and say, hey, I need more time, the seller can go, no, I'd rather just have your earnest money. Thank you. So I would definitely be absolutely realistic to the timing. Like I have another one, she's just texting me now wanting, because it's a cash deal. She wanted 3 weeks. So we agreed to that. Now she's coming back and she only wants 2 weeks. And I'm like, too late. The move's all set up. We can't change it all because the movers are crazy as well right now. So anyway, so yeah, I think, you know, you have to be realistic. And it's funny because the question came up, I think, on your questions about low appraisals. And I put this out to my office, which is Yarrow Bay, Windermere, Yarrow Bay, Kirkland. And, you know, we have close to 100 agents. It's very high volume. And then I also put it on one of our, you know, some of the Facebook real estate pages about anybody's having issues. I haven't heard too many low appraisal issues. So I'm not sure who's having those, but if it's a lower volume maybe that are having them, but I've not heard that. And so, and I've not heard too many deals not closing on time. So, cause I put this out, what do you guys need more of from, you know, the mortgage people, and, you know, people didn't have a lot to say, or I think everybody feels like you guys have done a good job. So yeah, I would just say be absolutely confident on when you can close it and give that date, because you do put the buyer at risk if, you know, you can't get it closed on time and then they're trying to ask for an extension and there could be a backup offer that's 20,000 more, you know. So yeah, just be honest about it.
Yeah, so don't overpromise and underdeliver. That's what I'm hearing from you.
Yep.
Yeah, that old adage, right?
Yep.
Well, we are coming to a close today. You have been absolutely wonderful on this panel. I truly appreciate your time. We've had a lot of good conversation, and I would love to extend a great gratitude to you all for attending today. I know everybody has been very busy. We all are learning, what's that saying where you're learning from a fire hose? Basically, like it is not a trickle effect right now. It is full force. We're all learning. And I just truly appreciate you all for attending. Thank you so much, Leah. Thank you so much, Darren. And thank you so much, Lynn.
Sure.
You guys are amazing. And I look forward to connecting with you more on Zoom and or maybe in person sometime soon outside for a cup of coffee or something, you know, you never know, right? But I want to hand this over to Lisa Goldsmith. Thank you so much, you guys, for allowing me to be your panel lead.
Thanks, Kelcey.
Thanks, Kelcey.
Thank you, guys. What a fabulous real-time, very professional presentation, orchestrated by brilliant minds all around. And thank you, audience, for engaging with us. We really appreciate that and hope that we're giving you something of value that you can take back to your people and share and keep on sharing. And please remember to go to our website. It's in the chat box, and see the upcoming events. In October, we have 2. One is, again, Renee Rodriguez doing Amplify Your Virtual Voice, sponsored by Movement Mortgage. And the other is our diversity panel. And like Lynn was mentioning, that's a real dynamic part of our vision for this year, is diversifying and also closing or taking steps to close the gap, to, you know, awaken the conversation on the gap in homeownership. So again, thank you very much, everybody. I hope you have a fabulous day, and please share what you've learned with everybody and get them to come too.
Thank you very much, everybody. Take
Thanks,
care.
Lisa.
Be safe.
Thank you.
Thanks.
Bye. Thank
Bye-bye.
you.